Hi everyone, I'm Melinda Jennison, Managing Director of Streamline Property Buyers, and in this month's update we're going to bring you all of the latest data from CoreLogic and PropTrack to help you understand what has been happening in and around the Brisbane property market. First of all, just a snapshot view based on CoreLogic. Listing volumes down 15.7%, auction clearance rate sitting at around 65%. Buyer activity is still relatively high. House values moved 0.9% increase in February. Unit values up 1% across the same period. And we've got gross yields for all dwellings now sitting at 3.9%. Now in Brisbane, it has been a tale of very tight supply now for several months. And as you can see here in this graph, according to SQM research, we did see a small uptick in the total volume of listings available for sale between January and February. Now, that's not unexpected because we will always see a seasonal drop in January as a lot of people will hold off their listings. But when we look at new listings compared to January, in February, we saw a 33% increase, which is a real delight for buyers that have been in the market because there has been a little bit more choice. But this February compared to February last year, we actually saw a decline. We saw an increase of 7.6%. So a little bit more choice once again, but not significant. The total listings are where the problem lies, and we're still 15.7% lower right now compared to this time last year. And as you can see, based on the long-term trend there, total listings are still well down on the long-term trend. And this is a reason why we've got such tight supply here in Brisbane. Sales volumes increased 2.4%, and this is data up to the end of February over that 12-month period. So we're seeing a little bit more buyer activity pick up in the market. When we're looking at auction clearance rates, the demand is still strong. So December and January auction clearance rates can be a little bit skewed based on the fact that a lot of buyers exit the market in December. They start entering the market in January, but we see fewer vendors listing in January. So that January information is only based on one weekend of auctions. February is more representative of where we are heading into 2024. So 65.85% clearance rate throughout February on average, and that's according to Apollo Auctions data. Days on market currently 20% lower than last year. So the median days on market in Brisbane is currently 22 days. We are still seeing several properties sell very quickly after the very first open home. So if you are in the market to buy, you must be prepared to act really quickly when you do see a property that is of interest. Looking at the CoreLogic data for dwelling values. So you can see there across the month of February, Brisbane had a monthly increase of 0.9%. That's spanning out to a quarterly change of 2.9%. And it sits the current median at 805,593, which is above the current median dwellings value for Melbourne. Although, as we'll point out later in this presentation, house values and unit values in Brisbane are still more affordable than in Melbourne. But this is compositional bias that's skewing the dwellings value data. When we're looking at the PropTrack information, again, showing a positive price trend in Brisbane, 0.54% growth on a monthly basis, annually 12.16%, both showing above the national average in terms of Brisbane's performance. Price segmentations, this shows the breakdown of which segments of the market across Brisbane are moving at different rates. Now you can see there the bottom 25% of property values have shifted 3.8% in the 3 months up to the end of February, whereas the top segment of the market shifted 2.3%. I will highlight again, this is dwellings data, so it does integrate both units and townhouses and houses. Everything is compiled into one. Because we've seen such strength in the unit market recently, that will be having an effect on that lower 25% of property values. It's just important to keep that in mind. But like most other capital city locations now, that top end of the market, the rate of growth there is definitely starting to slow down, although it is still positive month on month. Let's have a look at Brisbane's performance compared to all other capital cities around Australia over the last 12 months. So you can see that Brisbane has placed second in terms of capital growth behind Perth in terms of its 12-month performance, with Adelaide and Sydney not too far behind. However, when we're seeing the shift in the most recent quarter, we look at the 3-month comparison, And it's Perth, Adelaide and Brisbane that are continuing to outperform the rest of the capital cities. And you can see that Sydney's really fallen away in the last quarter. This is a trend that we always like to watch to determine which segments of the market are leading the growth on a short-term and a longer-term basis. Looking at house values now. In Brisbane, across the month of February, we saw a shift of 0.9%. Quarterly growth for housing is now sitting at 2.8%, and annual growth for housing has been 15.7%. It's a very strong performance in the housing sector of the market in Brisbane. PropTrack data also shows the same trend, 0.56% change in monthly growth for Brisbane and a 12.2% increase annually for houses. Both of these figures have outperformed both the capital city and the national average. So Brisbane has certainly been an outperformer over the last 12 months. Now looking at unit values, according to CoreLogic, unit values increased 1% throughout the month of February. Quarterly unit values are sitting at 3.6% change. So on a quarterly basis, the unit market is currently outperforming the housing market here in Brisbane. Annually, units have moved 14.8%. It's really outstanding performance compared to the national average as well. Looking at the PropTrack information, units shifted 0.4% across the month of February, and annual growth for units, according to PropTrack in Brisbane, sitting at 11.9%. What I did want to highlight in this graph is just how much change there's been in the movement of property prices between houses and units. And in the first part of the graph during the pandemic, you can see those dark blue lines or the black lines have really outperformed the light blue lines. The dark blue lines are the housing market and the units are in the light blue areas. So in the post-COVID boom, we really saw a shift in house values that outperformed that shift in units. When markets retracted throughout 2022, we saw the housing market in Brisbane impacted the most and units were much less affected. Now, since about March in 2023, and we've seen this huge recovery in Brisbane property values, but we've seen fairly equal performance across both segments of the market in terms of the house market and the unit market. And that's evidenced by that last group of bars, which shows the light blue and the dark blue lines performing at a similar level month on month. And this has really been the outperformance that we've seen in the unit market across the last 2 years in Brisbane compared to the housing market, because units did not detract as much as housing during the drawback or the pullback. However, they have continued to perform at a similar level to housing since the recovery's begun. And if we look at the house and unit performance across all capital cities on a 12-month basis and a 3-month basis, you can see here that in the housing market, Brisbane's actually performed second behind Perth in terms of its 12-month performance. And in the unit market, it's very similar to the performance of Perth. So this is breaking down units and houses as opposed to looking at dwellings as a whole. Over the 12 months, it really was Sydney houses that moved ahead more so than units. So this gives us an understanding of the composition of which property types in each city are actually performing in different ways. The shift then towards the 3-month change, you can see there in Perth, it's the housing market that's been leading the most recent growth, not so much the units. Adelaide, fairly consistent across both segments of the market, and same with Brisbane. So again, this tells us the composition of what is in higher demand, what's shifting at a faster rate at each capital city when we're breaking down those units and those houses. Looking at vacancy rates in Brisbane. Now, vacancy rates have been consistently low for some time now. We're currently sitting at 0.9% across the city. So you can see there we saw a seasonal spike in January or December, January, which is not unexpected. It's an indication of more properties being advertised for rent that corresponds with that peak letting season. So vacancy rates very tight across the city, and in some locations we are still seeing those vacancy rates less than 0.5% at a local level, and that's putting enormous pressure on tenants to try and secure a rental property. Of course, low vacancy rates generally will contribute to higher rents. Growth in rents is still strong across all of Brisbane, especially in the unit market. So you can see there across the 12 months up to the end of February, Brisbane units in terms of the rents, they grew 12.3%, second behind Perth in terms of national performance. The change in rents in the housing market for Brisbane are 7.5% in the 12 months up to the end of February. So that rate of growth in the housing segment of the market has been a lot slower compared to other capital cities around Australia, but also compared to the performance in the unit market. So when we are looking at the 12-month performance and combining the capital growth and the rental growth, the overall gross return has been more positive in the unit market here in Brisbane, which is an interesting trend and something that we've not observed for some time. Just to summarise the market, Brisbane's rate of growth is slowing. So month on month, we're seeing a small retraction in the rate of growth, although that growth is still positive. Over the last 12 months, Brisbane was the second highest capital city market in terms of its growth rate. However, in the last quarter, we're now the third highest behind Perth and Adelaide. So we are starting to see that rate of growth slow, although we're one of the top three markets still in terms of quarterly growth, which is still, very strong performance on a national basis. I will say units and townhouses in Brisbane are in very high demand. We're seeing some very strong prices achieved at auctions for townhouses in blue chip locations and very strong buyer demand in terms of multiple offer situations on most units that are selling. This is somewhat unusual given the unit market in Brisbane has typically not been as desirable as the housing market. However, things have changed since COVID. And we're starting to see that shift to a more affordable lifestyle, and people are willing to compromise on the type of property that they're willing to live in to ensure that they stay in the lifestyle precincts. And potentially that's one of the reasons why the unit and townhouse market has been a strong performer, but also they are a much more affordable option for people that are getting into the market. So rather than living 50 or 60 kilometres from the CBD or further away from employment hubs, a lot of people are choosing to downsize the size of the property by looking at units and townhouses to live in locations that are in closer proximity to their work. The other thing I'll mention is the top end buyers have been more cautious. We're observing this at auction where some of those clearance rates for the high-end properties are starting to dwindle. Buyers are more cautious, or alternatively, sellers still think the market's moving at a faster pace than what it's actually moving. So it's something that we're watching. We are aware that the top end of the market has slowed down in terms of the rate of growth compared to the bottom end of the market. But I will say overall, the fundamentals are still in place for positive price growth across the city, although we absolutely do not expect that price growth to be similar to what we experienced throughout 2023, where we had such strong price growth performance. For those that are wanting to get in touch with us, you can scan this QR code. It's going to take you to some free resources that we provide. Please connect with us on Instagram to follow what's actually happening on the ground. And I look forward to bringing you another update next month. Thank you so much, and bye for now.